Hello and welcome to Bitcoin Dorks, your daily source of news and insights about the cryptocurrency markets. In this video, we'll be discussing the latest report from Glassnode, a blockchain analytics firm which has found that over 50% of Bitcoin in circulation has not been moved in the last 2 years. This is a significant finding that has implications for the Bitcoin market and its long-term outlook. But before we dive into the details, let's first understand what this means and how Glassnode arrived at this conclusion. Bitcoin, like other cryptocurrencies, is a digital asset that is stored on a decentralized blockchain network. Every transaction that occurs on the Bitcoin network is recorded on this blockchain, which is a public ledger that can be viewed by anyone. Using this data, Glassnode was able to analyze the movement of Bitcoin over time and determine that over 50% of the Bitcoin in circulation has not been moved in the last 2 years. This means that these Bitcoin holdings have remained dormant, without being transferred to other wallets or used in any transactions. So why is this significant? Well, one possible explanation for this is that these Bitcoin holders are taking a long-term view of the market and are holding onto their assets as a store of value. This is in line with the narrative that Bitcoin is a digital version of gold, a safe haven asset that can protect against inflation and economic uncertainty. But it's also possible that some of these Bitcoin holdings are lost or forgotten, as users may have lost access to their wallets or forgotten their private keys. In fact, it's estimated that up to 20% of all Bitcoin may be lost or stranded in inaccessible wallets. Regardless of the reason, the fact that over 50% of Bitcoin in circulation has not been moved in 2 years has implications for the Bitcoin market. For one, it means that the available supply of Bitcoin is reduced, as these dormant holdings are effectively taken out of circulation. This can put upward pressure on the price of Bitcoin, as demand for the remaining supply increases. But it also means that there is a risk of volatility in the market, as large movements of these dormant Bitcoin holdings could potentially impact the market. If these holders were to suddenly decide to sell their Bitcoin or move it to other wallets, it could cause a significant shift in the market dynamics. Of course, it's also possible that these dormant holdings will remain unchanged for years to come, which could lead to a more stable market in the long term. But as we've seen in the past, the Bitcoin market can be unpredictable and subject to sudden shifts in sentiment and demand. So what does this mean for Bitcoin investors and enthusiasts? Well, it's important to keep an eye on these market dynamics and understand the implications of the supply and demand dynamics at play. It's also important to have a long-term view of the market and understand that Bitcoin, like any investment, carries risks and uncertainties. But ultimately, the fact that over 50% of Bitcoin in circulation has not been moved in 2 years is a sign of the growing maturity and stability of the Bitcoin market. As more institutional investors and mainstream companies enter the market, we can expect to see more long-term holders and a greater emphasis on Bitcoin as a store of value. That's it. If you're interested in learning more about Bitcoin and cryptocurrency, we recommend checking out some of our other videos. We cover a wide range of topics, from market analysis and price predictions to blockchain technology and the latest developments in the industry. And if you're new to the world of cryptocurrency, we encourage you to do your own research and learn as much as you can about the technology and the market. There are plenty of resources available online, from educational websites and forums to social media groups and online communities. One thing to keep in mind is that the cryptocurrency market can be volatile and unpredictable. Prices can fluctuate rapidly, and there's always a risk of losing money if you invest without doing your due diligence and understanding the risks involved. That being said, there are also plenty of opportunities for those who are willing to take the time to learn and make informed decisions. Bitcoin and other cryptocurrencies have the potential to revolutionize the financial industry, and many experts believe that they will play a major role in the future of money. Before we wrap up, let's briefly touch on some of the other developments in the Bitcoin market. As of the time of this video, the price of Bitcoin has been hovering around the $60,000 mark after hitting an all-time high of over $64,000 earlier this month. There are a number of factors that have contributed to this surge in price, including increased institutional adoption and mainstream acceptance, as well as ongoing inflation concerns and economic uncertainty. At the same time, there are also concerns about the environmental impact of Bitcoin mining, which requires massive amounts of energy and has been criticized for its carbon footprint. While these issues are certainly worth considering, it's important to keep in mind that Bitcoin is still a relatively new and evolving technology. There are many potential use cases and applications that have yet to be explored, and we can expect to see continued innovation and development in the years to come. So that's it for this video. We hope you found this information helpful and informative. As always, make sure to subscribe to our